The Essential Directorship Masterclass, Achieving Excellence at Board Level. The UK Corporate Governance Code. The UK Corporate Governance Code is not a rigid set of rules, but consists of principles and provisions. The principles are the core of the code, and the way in which they are applied should be the central question for a board, as it determines how it is to operate according to the code. It's based on the comply or explain approach. A shorter, sharper UK Corporate Governance Code will be introduced on the 1st of January 2019. It will place greater emphasis on stakeholders, particularly the workforce, diversity, integrity, corporate culture, and how a company's overall performance contributes to its long-term success. But as of 2018, the principles are as follows: leadership, effectiveness, accountability, remuneration, and relations with shareholders. So let's look at the principles one by one. Leadership. Every company should be headed by an effective board, which is collectively responsible for the long-term success of the company. There should be a clear division of responsibilities at the head of the company between the running of the board and the executive responsibility for the running of the company's business. No one individual should have unfettered powers of decision. The chairman is responsible for leadership of the board and ensuring its effectiveness on all aspects of its role. As part of their role as members of a unitary board, non-executive directors should constructively challenge and help develop proposals on strategy. Now, effectiveness. The board and its committee should have the appropriate balance of skills, experience, independence, and knowledge of the company to enable them to discharge their respective duties and responsibilities effectively. There should be a formal and rigorous procedure for the appointment of new directors to the board. All directors should be able to allocate sufficient time to the company to discharge their responsibilities effectively. Let me just repeat that. All directors should be able to allocate sufficient time to the company to discharge their responsibilities effectively. All directors should receive induction on joining the board and should regularly update and refresh their skills and knowledge. Let me repeat that also. Should regularly update and refresh their skills and knowledge. The board should be supplied in a timely manner with information in a form and of a quality appropriate to enable it to discharge its duties. The board should undertake a formal and a rigorous annual evaluation of its own performance and that of its committees and individual directors. All directors should be submitted for re-election at regular intervals, subject to continued satisfactory performance, and in future that will be required to be annually. Now, accountability. The board should present a fair, balanced and understandable assessment of the company's position and prospects. The board is responsible for determining the nature and extent of the principal risks it is willing to take in achieving its strategic objectives. The board should maintain sound risk management and internal control systems. The board should establish formal and transparent arrangements for considering how they should apply the corporate reporting, risk management and internal control principles, and for maintaining an appropriate relationship with the company's auditors. Now, remuneration. Executive directors' remuneration should be designed to promote the long-term success of the company. Performance-related elements should be transparent, stretching, and rigorously applied. There should be a formal and transparent procedure for developing policy on executive remuneration and for fixing the remuneration packages of individual directors. No director should be involved in deciding his or her own remuneration. Relations with shareholders. There should be a dialogue with shareholders based on the mutual understanding of objectives. The board as a whole has responsibility for ensuring that satisfactory dialogue takes place with shareholders. The board should use general meetings to communicate with investors and to encourage their participation. From January the 1st, 2019, the principles will be as follows: leadership and purpose, division of responsibilities, composition, succession and evaluation, audit, risk and internal control, and remuneration. So, do you know your corporate governance code? Do you have a copy of your national corporate governance code? Have you read it carefully and marked up any significant paragraphs? How confident are you that your company applies the principles of corporate governance? And so to the next video.